Hey, Shalom. Double honors to the apostles of GMS. Honest Jew brothers that be pushing this truth in sincerity, alright, throughout the four corners of the earth. Alright. This is literally going to be a short video based up upon two statements, or rather more two principles, excuse me. In this first statement here, you got it to where, and I'm going to read a little bit of this, and like I said, this one's going to be a real quick video. It says stock markets on the cusp, right, of another financial of another crash. One financial analyst. What that implies, right, is that what we had on that so-called Black Monday, all right, was actually a market crash. It wasn't a stagnation in the market. It was actually a crash, and they quote unquote rebooted it and so on and so forth. But look, man, your kingdom is getting to a point to where, you know, these elites are getting you people ready to let you know that they're about to do this thing, man. What you had on Black Monday was was a dry run, man. A test run. Okay, so I'm gonna read this, but what I really wanted to touch on is and I'm gonna just speak it from the information that I've read up upon, which is the stuff relating to the increasing in taxation. No more the increases in interest. All right, because all of the profits, all right, not so much the profits, all of the wealth the people in this world have right now. All right, you got a lot of people that's that got this, that, and the third, and they're driving around in this, that, and the third, and that's all good and well. But from 2008 upwards to now, all of the growth that you've had was off of the back of interest rates being low. All right, see what they do with in the so-called Federal Reserve is they lower and raise interest rates, which is the interest rates you pay upon the loans that you have. Okay, that's why mortgages can go up and down, man. It's based off the interest rate you got. You can buy a house for I don't know, 100 grand, all right, and the interest rate on it could be next to zero, right, when you buy the house. But that's not a fixed rate, man. That rate's gonna go up and down, and that's gonna increase the amount of you actually pay back to where you might be paying back 200,000 pounds. That's where the banks make their money from. They make it off of your debt, right, which is going to be gotten about by way of the interest rates. Whether you're borrowing money to buy a house or borrowing money just to have some goddamn bread in your fridge and that, man. All right, it's all based off the same thing. See, now you got it to where now the market's quote unquote crashing because the Fed Reserve, right, are in a bit of a mingle, man. They're in a bit of a pickle right now. Right, and that's really all the markets. Federal Reserve represents all the different financial markets that you got out there in the four corners of the earth, whether it be England, America, China, all of that. They're in a state of having to. They're gonna have to raise those interest rates at some point, man. So you can't go off of free money all of this time. All right, those rates is gonna have to go up. That's the nature of these things. But in so doing, you're having it to what you're seeing right here, man. All right, the stock market's being on the brink of another crash. All right, and when those rates do go up, man, it ain't gonna be like how they did it before, to where they might lower interest rates one year and raise them up a little bit the next year and so on and so forth. It's not gonna be like that, man. See, when they raise them up, people are gonna be losing jobs. All right, business is gonna be closing down. All right, and you're gonna really ultimately, it might not even get to that, man. It might just be a straight out market crash, a proper market crash, to where your money is gonna be worthless overnight, man. It might just be that. All right, so I can't tell you the ins and outs of the financial market. I ain't an expert at it, but from what I understand, from the stuff I've been watching and reading upon, which I advocate you brothers to be getting into, because really this world is run off of the interests of these private bankers, man. The interest that they base on you. So you work for a company, and that company has certain leeways that they can moving in and out of. And really, man, when they go and buy and purchase all of that, really don't think that they got that money in the bank, man. They're buying that off of the basis that they're gonna sell those products, and with the profit that they make, they're gonna pay back their debts, man. That's why you have overheads. All right, that's how this whole society is based off. It's based off of debt, man. See, in the proper world, when you set up a business, all right, when you buy a product, where you're buying supplies and so on and so forth, you buy those supplies off of last year's profits. All right, but see, in this society, you take out some more debt on the basis that you're gonna get some profit. You're gonna pay it back. You're gonna pay that profit back. Furthermore, you pay that overhead back, and then whatever's left, you share it out in your companies, right? But let's say that debt that you acquired by way of getting those and I'm thinking of my company that I work for at the minute, man. Whatever materials that you got off of that, man. All right, and like I said, I don't know the ins and outs of it, but whatever debt that you've acquired, man, that can go up and down, man. The subtotal or the amount you have to pay back, it can go up and down based off of the interest rates. And guess what, man? Those interest rates can skyrocket any time, at any point, man. All right, and that's the times we're getting into. We're getting into the state of total instability, man. Total market instability, and really, that goes to show you that the Most High is getting ready to come back, because he's taking away the really what this man's power has been based off. It's based off of a lie in this money, man. This money is meaningless, man. Those pieces of paper, those are meaningless, man. All right, that's why you have to use different pieces of paper in different countries, man. All right, you have gold. Gold you can use any country, man. All right, now you got the American gold. They might be, they'll take it, but they'll take it hastily, man. All right, you might not get a good trade off over there, because even in that they put, it's not as pure as if you get your gold from, maybe Switzerland, all right, or England, all right, places like that of where you have some genuine gold. But let's say you have some genuine gold or silver, man, you can trade that all over the place, because that's of note and of value. All right, so I'm gonna read this pretty much verbatim, and that's gonna be it. It says financial analysts have warned of another crash in the global markets as FTSE 100 fell 120 points, and this was going back yesterday when I read this article at first. All right, it says in just 2 hours of trading on Tuesday. So they based this information off of Tuesday, published it on Wednesday, or I saw it on Wednesday. All right, so this was published on the 23rd. So this was published on Wednesday. All right, but this analysis is based off of Tuesday. And they're saying this is the biggest slump since the Chinese stock markets plummeted on Black Monday last month, man. All right, see, when he was reading about Black Monday, they was talking about, oh, this is the worst since a couple of years ago, or since 2008. Now it's like, oh, it's worse than it's as bad as last month, man. All right, so it's a month-on-month instability that you're gonna have to get used to, but you're not gonna get used to it. All right, what's gonna happen is your market's just gonna crash, man. All right, it says the IG market analyst Joshua Mahoney asked whether the world was on the cusp of a major sell-off of the U.S. Federal Reserve Bank, right, and Bank of England consider interest rate raising interest rates, and I spoke about that. All right, all that free money, all that ease of life, that's going to be a thing of forgetting about, man. All right, see them so-called Jews that they really have the Federal Reserve, that own the Federal Reserve, because there's nothing federal about the Federal Reserve. All right, them so-called Jews want their money back, man. But really, you got to understand. We have to understand. They don't want their money, because that money doesn't exist in this first and foremost. What they want to do is enslave you people by indebting you, right? By giving you free money, which they can raise interest on, right? Therefore, you being bound to paying that interest back, and the initial sum, you are in debt to them, man. You are a slave to those elite banking families. It's that clear cut and simple. That's the ultimate end goal. That's the blueprint, if you will. Okay, that's what they want to do. That's what they are about, man. They're about enslaving the people, man. Why do you think they come up with the RFID chip, right? Which we know in the scriptures is the mark of the beast, man. You think that's all about, man? All right, so you can cash in your hours that you've done at work, and say you're paying your so-called debt off, so you can live in that that overpriced house that you have, where you got different places out there that'll be more appropriate, man. You can pay off that overpriced car that you got different kind of cars out there that you can that's more practical. All right, it says Mahoney said the artificially low interest rates held by the Federal Reserve and the Bank of England, right, had acted like steroids, right, and brought the markets to heights previously unseen, right. In other words, they brought it to a bubble, man. All right, it weren't real, man. See, you've been living the American dream, now you're about to live the American nightmare. Okay, right. It says this stark warning comes as commodity prices, the FTSE 100 slumped in recent days, with mining, oil, and copper prices falling sharply. It says with the FTSE 100 tumbling over 120 points, right, in 2 hours, right, it is becoming clear that there is a distinct possibility of yet another another crash in the financial markets, and that's that what the experts said. That's gonna happen, man. And really, man, it's likely it's gonna happen this year, man. All right, because from you watch, you go into the history of the videos, man. They've been talking about this, man. They've been talking about this. They've been information that this market crash is going to hit in 2015, man. Okay, it says the stories of the monetary policy have been brought heights, right, of previously unseen in the global markets, and yet the Fed, right, and the Bank of England, right, begin to wean off us this artificial high. It says we are coming to find ourselves perilously exposed to another major sell-off. Analysts continue to express concerns about the market stability after Shanghai's index fell 8.5%. You know about that on Black Monday. It says China's surprise devaluation of its currency in early August was blamed on the fall, right, along with the slowing of the economic growth, and investors feared that the stock market had peaked. All right, and that's an important statement, man. That peak, right? So when you understand, what they're talking about in those in the market terms, what they're saying is they can, even if they go into negative interest, even if they're giving you money, man, all right, it's peaked. All right, what's gonna happen now is a crash. You're headed for a crash. When you peak, right, you go up, all right, and then you come down, man. Right, so if we're at the peak, guess what, man? It's gonna be a fast ride up all the way back down, and that's how these different analysts have been able to predict that there's gonna be probably a 2015 crash, man. All right, because they knew that the peak was somewhere near here, and we're somewhere near here. That's what they figured out, and they said, look, man, we're gonna be headed over here, and because it was being such a high peak, right, greater than before, it's gonna be a fast fall, man. Right, it says nearly 444 billion, right, US 67.3 billion was wiped off the FTSE 100 companies on Tuesday. What the FTSE 100 is, it's an index. If I remember my information correctly, it's an index based off of the top 100 companies, right, within the UK. All right, so 44 billions worth of money was just wiped up, just disappeared, man. That goes to show you that this money just disappeared. How does 44 billion just disappear, man? Right, it says with mining stocks, right, being right the biggest casualty, and that's all that witchcraft, man. That's witchcraft, man. You have 44 billion, man. 44 billion. Do you know what you could do with 44? Do you know what you could do with 1 million? You know what you could do with £1,000, let alone 1 million, let alone 1 billion, let alone 44 billion, man. All right. It says mining was the biggest casualties, and it says this is due to the price of oil falling sharply by 2.5% and copper hitting right a 2-week low. All right, and you know what? That's pretty much it. I don't need to get all up into the different information. Hopefully, the different the important messaging that was portrayed. All right, hopefully that's been portrayed. All right. With that, I'm going to sign out. Say double honors to the apostles of GMS. All right. Honest you brothers that be pushing this truth in sincerity. Man, you stay up, man. All right. Watch, man. All right. And pray. All right. Shalom.